The dollar-based fiat monetary system is in the process of collapsing. All the fiat currencies are going to die. I think this monetary system is dead before 2038, way before 2038, and just completely dead. The time point at which they run out of tricks will be when the quote-unquote aha moment occurs. The aha moment is when a vast majority of the people realize that the money can never be saved and it's going to be worthless, and therefore I have to get out of that old form of money. It's called Gresham's Law. You're getting rid of the currency that you know will lose its purchasing power, and you're buying a currency that you know will hold or increase its purchasing power. And we define that as either a deflationary collapse or they print money to try and keep it going, but the money loses all its value, and that's a hyperinflationary collapse.
Welcome to the Microscopic Podcast presented by GoldRepublic. My name is Alexej Jordanov, and in this format I invite you to look at the world through different lenses, to see what's hidden in plain sight. We'll dive deep to understand the forces that drive macroeconomics, financial markets, and the emergence of a new monetary system with sound money like gold, silver, and digital assets like Bitcoin. We'll also investigate how geopolitics and power games shape the world we live in, but also what can we learn from history to understand the present and prepare for the future. I hope you will get fresh insight and enjoy this conversation. If you do, as always, please give it a like and subscribe, but also leave your actions down below in the comment section and share it to those who need to hear this. But before I start, I'd like you to know that if you open an account at GoldRepublic, you will receive 1 free gram of gold. Just click on the link in the description. Welcome to the show, Larry.
Oh, thanks. Very nice of you to have me on, Alexej.
Yeah,
I appreciate it.
We are, just for context here, this is the first interview we're recording here on Madeira in Portugal, in the context of the Bitcoin Atlantis.
Yes.
And we had our first interview, I think, a year and a half ago.
I think that's right, yeah.
And from your friend recommended Greg Foss.
Absolutely, yep.
And so it's actually a great context because we're in the middle of the Atlantic on this island. Yeah. And I kind of also looked already up front, okay, what is the theme of Atlantis? And actually there was a theme that, if I'm not mistaken, Pluto, about the fact that it's the down of the dominant society that at that time had the favors of the gods,
right? And
they were crushing other nations and that were having the most of the dominance in the Western Hemisphere.
Yeah.
And it was at the time ancient Greece, and the opponent would be Athens.
Yes.
And would come a moment where the gods didn't favor Atlantis anymore and submerged it into the Atlantic Ocean.
Yes.
So if we look then, if we take this as a starting point of the story, in terms of mythology, we could say that the US would be maybe that dominating system.
Correct, yeah.
And the gods would be maybe like what we would see as the forces in the macroeconomic sphere.
Yes, sounds right.
Maybe a good first question would be to start off this interview by asking you, okay, what do you see in those forces?
Well, gosh, there's a lot in there. I'd say, I mean, so first of all, we should tell the audience we're recording this. Bitcoin's at $64,000 a coin right now. It's nicely been up 20% in the last, 10 days or something. The big picture is that the old legacy monetary system is dying, and it's dying as a result of a flaw in its design. And the flaw in its design is Keynesianism and fractional reserve banking, and the notion that you can grow debt at a rate in excess of growing the underlying productivity that comes from debt. And that when you do that, ultimately you create something that's unsustainable. And you have to continue to grow the debt faster and faster. So it's like you're running on a treadmill that keeps speeding up. And eventually you can't run faster and the whole thing collapses. And we define that as either a deflationary collapse or they print money to try and keep it going, but the money loses all its value, and that's a hyperinflationary collapse. So yes, the dollar-based fiat monetary system is in the process of collapsing. That's the underlying theme. But this is not, the Roman Empire collapsed as well. It was the last large, empire that had, kind of the base layer of money, the denarius at this time. And it took a couple hundred years for that to happen. And in our particular case, this process started a long, long time ago with the, fractional reserve banking, the invention of the Fed, creation of the gold standard, going off the gold standard in 71. And here we are 50 plus years since that time, and we're still not collapsed. So, and it's going to take a bit more time, right? But it's, I always I think Preston Pysh says it very well when he says, it's like a woman giving birth. The contractions are getting quicker and they're getting stronger. And we saw a big, we saw one in 2002 or 2000 and 2002 when that bubble burst and they went to 0 interest rates or 1% interest rates on the Fed funds rate. We saw one in 2008, which is kind of the next one, where they, bailed out all the housing malinvestment. And then we saw one in 2019 with the repo blowout. We saw it in 2020. And then we saw another one in March of 2023 in Silicon Valley Bank. And, to the credit of the people we're fighting against, they're pretty good at kicking the can and inventing rule changes to keep their legacy system going because it so obviously benefits them in an enormous way. But they're going to run out of tricks. And you say, when? Well, we can talk about that in a moment. But the time point at which they run out of tricks is what I'll say, and I mentioned this in an earlier podcast, will be when the quote-unquote aha moment occurs. And what's the aha moment? The aha moment is when a vast majority of the people realize that the money can never be saved and it's going to be worthless, and therefore I have to get out of that old form of money. And I'll give you a good example of the aha moment and how quickly it can occur, because this occurred recently. In March of 2023, the Silicon Valley Bank failed. And how did that happen? Well, the week before they failed, they were forced, for liquidity reasons, to sell some bonds. And they sold those bonds that they had marked at close to par, and they sold them at a deep discount. And somebody saw that, and they did the math, and they said, holy shit, they sold these bonds at a deep discount. That means all these other bonds they held, those should be at a deep discount too. If I look at the balance sheet and do the math, they're bankrupt. They're $20 billion in the hole. They don't have any equity left. So that analyst, that aha moment led to a call to a couple of big venture capitalists in Silicon Valley. And those guys said, we got all our money at this bank. We got to get out of here. And they quickly spread the word, email, phone calls, etc. And this is what's stunning to me. There was $100 billion in Silicon Valley Bank deposits. One day, $45 billion was withdrawn. One day. So, as I said in another podcast, this is not Jimmy Stewart, at Savings and Loan, and handing out money to people. This is a digital bank run. And why did that occur? It occurred because in everybody's mind, everybody quickly came to the same conclusion. This bank is bankrupt. I've got to protect myself. I've got to get my money out of here now, right? And that aha moment will someday occur with respect to the dollar and all fiat currencies. These currencies are worthless and are only going to get more worthless. And this is a game of musical chairs where I've got to grab a chair. And Lynn recently did a nice podcast where she talked about this, view it as musical chairs. And so that's coming, but the timing and, the issues before that are, unclear and to be debated and so on and so forth. We can talk about that, but that's kind of the big picture is that we are watching a monetary system fail in real time, which is, somewhat terrifying. And some people say I'm a doomer for saying that, but it's just analysis. And I'm not really a doomer at all, because I think it's fundamentally at the other side of it, it's a really good thing, because we will go back to a sound monetary system and that will solve a lot of problems. So that's kind of my view of where we're at right now. Yeah.
And when you think about more of like the weakness of the dollar as such, because it is the currency that also holds this whole circus running as well.
Oh yeah.
And I've recently actually a great podcast that Alf recorded recently on what Bitcoin did. And he was talking with Peter about the fact that, and I think he explains like things in a great manner. He does, I had him on the podcast a couple of times, and he said, well, if it goes down, if it implodes, it will first gain in strength. Everybody will seek refuge to the dollar because all kinds of debts are denominated in dollars.
Yes.
There's a euro-dollar system. Yes. There's all that keeps developing countries like financed through the debt. But then after that, it's kind of like this black hole, and then it will basically take everything down, which is denominated in its own
correct.
currency.
And you know, I mean, friend Brent Johnson is correct. I mean, the dollar is the strongest currency of all of the fiat currencies, but that's not really much to brag about because all the fiat currencies are going to die. You know, and I mean, the Swiss National Bank recently announcing that they're printing money to buy stocks. I mean, it's just another example of the kinds of things that are going on. I mean, these fiat currencies, they're just doomed. They're just completely doomed. I mean, the U.S. federal budget deficit for the first quarter this year was $500 billion. So we're going to run, north of a $2 trillion deficit in a theoretically healthy economy. I mean, it's just, it's nuts. It's just completely nuts.
Could you just compare it maybe for example, democracy is there's a say that democracy is the least
bad form of government. Yeah.
That you could say that this form and this system, and I'm not going to say capitalistic because it might not be actually capitalism.
It's crony capitalism. Yeah.
Exactly. It might be a corrupted form of capitalism. That is still kind of the best, worst system.
Well,
in one way or another.
You mean the dollar versus other currencies?
Or just in general, like the fiat system, because when in history, for example, if we look back at maybe like the 1900s when gold standards were in place, would there be like a moment in history you would say that, okay, this is what actually it could look like, but then obviously it's a bit anachronic because we're in a globalized world and different dynamics.
Yeah, I mean, it's a little bit of an apple and an orange in terms of technology and everything else. But I will say this. I mean, the world did, the advance in living standards from 1900 to 1971, when we were on a quasi gold standard, was pretty unbelievable. Do you know what I mean? And so, that wasn't entirely sound money because you had fractional reserve banking and you had money supply growth, but it was sounder than what we have today. And living standards, I mean, they just, and then, there were a lot of other things. There was the Industrial Revolution, there were, radio, TV, cars. I mean, there are all kinds of technological developments, but the living standards really advanced substantially during that time frame. And living standards, I think, will always continue to advance just because of human beings and who we are and how, how smart and inventive we are. I mean, we're going to continue to do things more, productivity is what drives higher quality living standards. The point, I guess, I'm trying to make is that fairness, which has to do with having the money be sound, because the money being unsound creates this enormous unfairness and creates this wealth gap and disparity. I mean, you're familiar with the term cantillionaires, people who get the money first. WallStreet, the people who can borrow for 0% when the rest of the world pays 20% on their credit card, they're hugely advantaged. And that's incredibly unfair. And that's what's created a lot of the division in society and, just a lot of bad after effects. It also creates a lot of the wars. I mean, I think if every American had to vote on whether they want to have their money debased to, chase a war in Afghanistan or Iraq or, wherever it might be, the vote would overwhelmingly be no. We don't have interest in doing that.
Talking about that, actually, it's also something that we discussed with Lynn, that sovereign debt crisis and war are actually intertwined.
Yes.
When we look at, for example, the French Revolution, was because they bankrolled much of what happened in America, North America, I should say. Yeah. And soon after unfolded the French Revolution, because there was a weakened treasury, because there was a need for more money and people thereby paying more taxes and so on and so forth. And there was like kind of this domino effect. Yeah. Well, today, it's a bit of a wild comparison here, but just from a dynamics perspective, that, for example, we see China, and this is more maybe on the geopolitical side, maybe trying to, because they do sustain their own crisis, right? There's a deep recession happening.
Yeah, they're having trouble right now, sure.
That maybe we could also cover. But we have, on the other hand, the Russia that has it's also like a fair amount of nuclear bombs, and we have U.S. Government that also feels kind of threatened on all kinds of sides as well. So everybody kind of feels threatened, but in the context of not very favorable macroeconomic or at least monetary setups, right? Yeah. So what I'm trying to say here is that there's a weakened macro environment with few tensions. So that's a bit of a
yeah. I mean, what you're describing is yes, this could potentially be unfortunate in terms of we don't know how these big governments are going to react, and we don't. I'd like to think that most of the world has recognized, as a result of the slaughter of World War II. And the development of nuclear bombs, that getting into a nuclear exchange is a losing game for everybody. Mm-hmm. I'd like to believe that's the case, and I think it probably is. But it's, there's a non-zero probability of a nuclear war starting, which would be just horrific, obviously. It could occur as a result of tensions and monetary instability and so on and so forth. So that you cannot discount those things. What I'd like to think, though, is that cooler heads will prevail. And if you really think about what a monetary disaster is, it doesn't necessarily, in my opinion, although it has in the past sometimes, it doesn't necessarily have to lead to war. It really, what it does is it leads to a reset of who's got the money. Mm-hmm. And so, if the dollar becomes worthless, the military-industrial complex is going to dry up and go away because nobody's going to be willing to pay for it. Mm. And a lot of people who have a lot of money denominated in dollar wealth aren't going to have the wealth. And the people who have their wealth denominated in Bitcoin or gold or property or other things are suddenly going to have a lot more wealth. And I'd be much happier having Michael Saylor as president of the United States than any of the current candidates. I mean, I know he's a libertarian. I think he's an honest guy. I think he's a decent guy. Mm-hmm. And so when there is a system with political power involved, it's not unusual to see the leaders and the people with the political power also happen to be the richest people. Mm-hmm. And of course, sometimes that's the case because they got the political power and used it to get rich. But in Michael's case, it would be because he's the richest man in the world and could maybe step in and say, hey, look, we got to go to a system that's a fair system. Mm. And this Bitcoin system is obviously a much better system because it solves this whole, seigniorage, monetary debasement issue, which has been plaguing mankind really for a long, long time. Mm-hmm. The invention of digital scarcity is really going to be seen as like an enormous breakthrough event. I mean, arguably, comparable to electricity or the printing press, the automobile, the airplane. I mean, anything big. Digital scarcity is a big fucking deal. Mm. It really is. I don't think any of us realize it. I mean, I was involved in investing in PCs and stuff, and I recall when the IBM PC came out, there were a lot of people who were very skeptical. Who needs a small computer? A guy who ran DEC, said, there's demand for a few hundred of those, maybe a couple thousand of those things. I mean, it just completely changed the world, right? I mean, when Microsoft came out, everyone was like, it's software. How can you have value in software? All the values in stuff you can touch, hardware. It sounds very much to me like what's going on now. Mm-hmm. How can you have money in digital money? That doesn't make any sense. But if you create the correct system, which Satoshi did, you can. I mean, we've got 15 years of evidence and 830,000 blocks saying it works. Could it stop working? Yeah, possibly. That's always a risk, but it seems low probability, very low probability to me. Mm-hmm. So I think that, eventually everybody's going to come around to that point of view. I mean, just like it would be absurd today to say, well, I'm going to go back to doing spreadsheets by hand with pencil and paper. Do you know what I mean? Or I'm gonna get my IBM Selectric out and start typing out letters the way my secretary used to do it 40 years ago, right? Well, of course you're not. You're gonna open up your word processor and bang it out, and off you go. I mean, that's what's gonna happen with Satoshis. I mean, Satoshis are gonna become the unit of account. We're gonna measure everything in terms of Bitcoin, and that's that. There will no longer be a monetary debasement issue. Period. Full stop. The world will look different. There won't be as much debt. I think we're gonna go to an equity-based world. Mm-hmm. Debt made sense when you could use debt to get ahead, the way it's been used by rich people for years. But in a mildly deflationary system, which is what the Bitcoin standard would be, you really don't want to have debt because it costs you more to pay it back in the future in real terms. Right? I mean, now it doesn't because of the debasement. You're always paying back in lower real terms, and therefore, hey, great, take out the debt. You don't have to pay as much back in real terms. If you use it productively, you get richer. It's the Hugo Stennis trade, right?
But wouldn't that stifle innovation then? If you don't
no, I disagree. No, I totally disagree. No, because again, innovation would get immediately rewarded through equity returns. It would be immediately rewarded, and more importantly, it would be properly rewarded. I mean, I would contend that it's fiat that's misled and debt and just the the looseness of money that's led to all of the malinvestments. Do you know what I mean? If you consider all of the money, I mean, once you really know your money is going to hold value, you don't throw it away. You're much, much more careful in your thought process. You know, you don't enter a war. You know, you don't go buy an NFT. You don't do any of the stupid fiat shit that a lot of people have been doing because they're constantly, you know, they think money is cheap and they're constantly trying to get more fiat, you know, no matter how harebrained the scheme. And there are, you know, a lot of harebrained schemes out there, right?
But there might be a moment where you need to borrow in one way or another for like a promise in the future.
There's no doubt. There will be debt. There's no doubt. I mean, and look, debt is good. I mean, okay, let's distinguish between two types of debt, right? Yeah. Debt for consumption, debt which, you know, I'm going to go borrow a bunch of money and I'm going to have a party, or I'm going to take vacation, I'm going to buy, you know, debt for consumption. It's not necessarily good. I mean, that's you're borrowing from your future self. You're saying, okay, I want something, I can't afford it today, but I'll pay for it in the future. You know, I'm going to take out debt. That's bad debt. But some people do it, and if they're willing to pay the usury price on it, okay, so be it. You get to live higher today and pay for it later. Debt that earns a return in excess of its cost. In other words, if you take out some debt and you build something productive, you build a piece of software, or you build a Bitcoin mining operation, you build anything that, you build an electricity generation operation, whatever it might be, that will have a return in excess of the cost of that debt. Well, that's good. That's necessary. You're increasing productivity. You're extinguishing the debt with additional productivity. The issue is productivity. You've got to get the productivity out of the debt. If you don't, then you are where we are today, which is to say, I mean, the government's just borrowing, billions and wasting it, more or less. I mean, sending it to other countries, doing stupid make-work projects, sending it out in terms of transfer payments. I mean, you name it. The government waste is legendary, and so that's not constructive, and it's not something that's sustainable either. Because eventually, the debt eats you alive. I mean, the biggest, on my Twitter feed, my pinned tweet is a pin of, this is a line of the growth in the debt, and it's a line of the growth in the GDP. And what it shows you is that the GDP, the debt is growing much more rapidly than the GDP is growing. And as a result of that, the GDP is going to lose its ability to service the debt. It's the GDP that generates income, revenues and income. It's that income that pays the interest on the debt. And so if you get to the point at which the debt is so large that you can no longer make the interest payments, you're defaulting effectively. And that's where the U.S. government is right now. The U.S. government is effectively defaulting. It's not obvious to everybody, but it's happening. And the reason is that their interest charges are over $1 trillion a year. It's larger than the defense expenditures. It's a huge number. And the growth, they're not using it on things that increase GDP. And while GDP is growing, it's not growing as rapidly as the debt. And so that's the fundamental issue. There was a great economist I really like named Herbert Stein in the Nixon administration, and he created the economics, what he called Stein's law, which is if something cannot go on forever, it will end. Okay.
It will drop like a stone, which is Stein in German.
Yeah, exactly. Right. It will end, and he's right. The question is when it will end. I mean, it's been a pretty persistent fallacy, and they've done a nice job of kicking the can, right? I mean, there are those of us who thought it would end in the 70s when we had a lot of inflation, and we thought that was it. This monetary system's going to blow up. Well, it didn't. And there've been a lot of scares since then. But as Preston says, the contractions are getting closer now. And they patched it all up in COVID. Well, 3 years later, Silicon Valley Bank blows up. Do you know what I mean? Okay, they patched up Silicon Valley Bank. Fine. The rumor now is that they're talking about doing something in the CRE space, commercial real estate in the United States. I mean, there are a lot of regional banks in the United States who've loaned money to commercial real estate developers who built buildings, which as a result of technology and Zoom and people not needing to be in the office as much, have lost enormous amounts of value. Lots of buildings in the U.S. are down 70% from their peak value. Some U.S. bank owns that paper. That paper is going to money heaven. And so that will decrease M2, right? And so the talk, what we hear, what a couple of us have heard from people in D.C., and it's a big town, a lot of people who go out and drink and talk and shit, is that they're kicking around some kind of a solution to the CRE problem, kind of a resolution trust sort of thing, which might lead to bailing out some of these regional banks who have bad CRE loans.
And so That is not just in the US, as understood.
Oh, is that right?
Germany as well.
Oh, is that right? I'm not aware
Germany
of that.
has a big problem right now. I just saw a Bloomberg article that I can show you afterwards that just covered about the same thing, about banks not being able to meet what they have on paper.
Not surprising. I don't follow Europe as closely, but it's not surprising. It's a worldwide problem. I mean, we overdeveloped.
And China.
And we know China, and China probably worse than all the above.
Yeah.
And I mean, it's interesting. Everyone says, well, the U.S. money supply is not really growing, and it is. It started to grow again, but it took a severe dip when Powell bumped up rates and all that. But if it's interesting when you get on TraderView and you look. I mean, the Chinese money supply is growing like a house of fire. I mean, they're printing like crazy over there. And because the world is so interconnected and because liquidity is so, rapidly moved in today's world, like I talked about with the Silicon Valley Bank, Chinese liquidity can pretty easily become U.S. liquidity, and so.
In which way?
Well, in the sense that they can do the FX. They can just, if there's money, if you can borrow money anywhere cheaply, people will do it. And then they'll hedge out the FS risk, and they'll use that money to take advantage of other places where they think they can earn a higher yield.
There's only so long you can do that, right?
Well, that's right. No, eventually it catches up with you. I mean, and as an example, right now, it may be starting to catch up with Japan. I mean, for years and years, and we don't know how big it is. This is the other problem. Some of this is really opaque. The Japanese, cost of money was zero. And so there was something called the yen carry trade, where, smart financial players would go to Japan, borrow in yen, hedge out the FX risk, in some cases not, but then use that low-cost capital to go earn a return somewhere else. And, do it, rinse, wash, repeat, and you can get a high return on equity. Until such time as either the yen starts to have trouble or, interest rates go up in Japan, and interest rates have started to go up in Japan. And so these are all the monetary games that the people in charge of the system play to keep the system going. And it's a little difficult to bet against them. Certainly it's very difficult to bet against them in a shorter time frame because, they have a lot of tricks up their sleeve. I mean, Silicon Valley Bank fails, they create BTFP, right? COVID comes along and,
BTFP is?
A bank term funding program, which I call by the effing paper. but I mean, the Silicon Valley Bank was bankrupt completely, and Janet Yellen was talking about guaranteeing $17 trillion of U.S. deposits to prevent a bank run in the country. And to be frank with you, I thought that was what was going to happen. I was like, okay, this is it. It's all over. And if I make a mistake, it's like I always think it's imminent, and it's not imminent. I mean, I've talked about it plenty of times on other podcasts. I mean, it's for me for true sat dollar parity, or for the dollar to become worthless, or for hyper-BITCOINIZation. I was talking with Luke Broyles about it earlier today. I kind of think it's probably something between 2030 and 2038. It's going to take time. But
it's precise dates though, 2030 to
2038. Yeah, and
why 2038?
It's just a guess on kind of looking at the cycles and the timing and how things are getting shorter, the contractions are getting stronger and more closely together.
How would you then chop it up then?
Well,
because you're I guess it's cyclical as well, and
it's cyclical. Well, right now we just had a downturn. I mean, M2 actually went down, which was very rare, because Powell took rates from 0 to 525 in a very short period of time. But it's M2 starting to grow again, implying that there's some liquidity in the banks are starting to lend. It's a little mysterious to me how it's actually happening, but
because it's not visible.
Yeah,
you see bubbles popping, but you don't know what's
exactly. I mean, they've got a lot of tools behind the scene that they're using, but yeah, I mean, the way I get to the 2020, 30 to 2038 timeframe is I use kind of the model that Howe and Strauss developed with the fourth turning, and you're familiar with this model, right? Where you get these,
80 years.
Yeah, exactly. You get these cycles, and so I date the beginning of this fourth turning to 2008. And fourth turnings have lasted from maybe as short as 7 to 10 years in the Civil War to more likely they're kind of 15, 20, perhaps even as long as 30 years. So if you kind of assume that, so we're not at 2028 will be 20 years, 2038 will be 30 years. I think this monetary system's dead before 2038, way before 2038. But yeah, just completely dead.
And by dead you mean exactly?
I mean the dollar's worthless.
Like like bullet points would be what?
Yeah, well, the dollar's worthless. Francs all currency is worthless, and we're on a Bitcoin standard. That's kind of what I think is going to happen.
That's soon. Okay.
Yeah, that's soon. Yeah, but like I said, I've been early and wrong plenty, so be prepared to have me be early and wrong again.
I'll put you in 14 years.
Yeah, again. Well, and I will tell you there are two possible ways they get out of it. Well, there are three maybe. One is they do kind of the playbook we ran after World War II, which is they run really high inflation until they can get the sovereign debt, size down to a place at which they can reestablish control of the monetary system. So they quote unquote kind of save it. It's like a Volcker, but over 7 or 8 years, right? And Israel did something similar when they had a problem like this. The other thing would be they do a one-time monetary reset, like what Roosevelt did, right? And he grabbed the gold, revalued it, devalued the dollar in terms of gold 70%, overnight. The government, somebody intelligent in the government could realize, hey, this monetary system is failing, we got to fix it. And therefore, we're going to do a 10-for-1 split on the dollar. And old dollars are worth 10, new dollars are 1. New dollar is backed by gold, oil, basket of currencies, whatever it is, but it's backed by something that can't be printed, so it's sound.
But would the US do that? Because I guess it would only harm the US, and all the others that have denominated debt in dollars would be like, hell yeah.
Yeah, you're right. That's right. And that's why it's probably not a high probability that somebody would do it.
Not popular either.
It's not popular. A lot of people get hurt. But, the alternative is the whole thing fails. Do you know what I mean? I mean, the alternative...
It's like Mad Max.
Yeah, well, it won't be Mad Max, but it'll be, for a very brief period of time, there'll be a lot of chaos. There'll be a lot of hyperinflation. I mean, I think, we could get to a stage where, you see, Bitcoin at a much, much higher price, and you see a dollar at a much lower price, certainly in Bitcoin terms, same difference. And, they're parallel, but eventually it goes back to what I said in the earlier part of the interview, which is to say that when a consensus of the people realize that the dollar is shit, that there's just no point. I mean, it's good for transacting, but nothing else. They're going to do what the people in Weimar Germany did in 1922. The minute they get a hold of a dollar, they're going to convert it. Nobody wants to hold it. It's like a hot potato, right? They just want to get out of it, get out of it, get out of it. It's called Gresham's Law. You're getting rid of the currency that will lose its purchasing power, and you're buying a currency that will hold or increase its purchasing power. And so that process will accelerate, and just as in the Silicon Valley Bank instance, everybody at once suddenly said, holy shit, this bank is bankrupt, I got to get my money out of there. It can happen fast. It could happen really, really fast. Now, the US dollar is... It's
the fastest bank run in history.
Yeah.
I mean, in terms of like time.
Yeah, right?
And
I mean, it was less than a week.
Yeah.
I mean, half
it was a matter of hours, I think, even.
Yeah, well, one day, $45 billion.
Yeah.
One day. I mean, talk about click money, right? Well, and that's the thing. That's why I say, don't discount the possibility that it could happen, quickly and before 2030, because, we're all so connected with the internet and social media.
The other way around, right?
Yeah.
Just like we see, for example, Coinbase that that has nothing to do with this.
Yeah.
Just like from a system perspective that UX or just a system in itself, like an exchange, in that case Coinbase, just crashed for a few hours,
right?
And people couldn't sell or buy.
Right.
And the same would then, like, if we have a scenario where people like flee the dollar or any other fiat currency to, let's say, Bitcoin, that all those gates are closed. Yeah,
well, that's right. I mean, in the short term, you could have some real volatility and some real problems, and that doesn't. To me, I wouldn't worry. Anybody who holds Bitcoin, I wouldn't worry about that. Do you know what I mean? I mean, yes, they can try and close the gates, but they really can't effectively close the gates because, absent shutting off all the electricity and shutting down the internet, which I view as just an almost zero probability event, there will be a way to transact in Bitcoin. Do you know what I mean? In some country, in some way. Now, in the short run, if the government made it completely illegal and threatened to throw us all in jail and grabbed all the Coinbase coins, there are a lot of things they can do to throw sand in our eyes. But if you've got your own coin, self-sovereign, I don't see how we come out. And by the way, if the government does any of these things, there's a Streisand effect, right? Everyone's going to go, holy shit, that stuff's really valuable. I got to get some because the government doesn't want me to have it. You know what I mean? There's a reverse psychology piece to it all. So,
but what if the government says just like gold and
they grab it? Yeah. I think what you're going to have, this is not the 1930s in America where people believed in the government and trusted Roosevelt and thought he was a good guy and trying to do the right thing. This is 80% of the country distrust the federal government, and everybody and their brother is going to say, "Oh yeah, thanks government. Yeah, F you. We're not giving you anything." And we see Texas that was basically ready to. Yeah, right. Exactly. Texas ready. Federal, exactly. Army. You're not going to defend the border. Fine, we'll do it. Right. And I got to tell you, most of the red states. That's how. 25 states back Texas. There are a lot of people in the United States that their view of the federal government is screw you. We're not going to play. And that's what it comes down to. It ultimately comes down to social consensus. If nobody trusts the government, And everybody wants to hold an alternative form of money, whether it be gold or silver, Bitcoin, land, you know, I mean, food, you know, cattle. I mean, you know, in a real Mad Max scenario, I mean, obviously, you know, even Bitcoin and gold aren't particularly valuable if you can't, you know, put food on your table. But again, you know, humans are incredibly adaptive, incredibly, you know, flexible, and can do things, you know, really well. And, you know, apart from some short-term disruptions, I think that we get, you know, whatever bad stuff comes, you know, solutions and workarounds happen to it really, really quickly. You know, and so while there could be a disruption that's uncomfortable, you know, just as in the 30s. I mean, there was a time in the 30s, a bunch of banks failed, and they shut down the banks, and they shut down the stock exchange for a number of days. I can't remember exactly how many, but it was a lot. You know, I mean, that kind of stuff can happen, no doubt. I mean, there could be a real disruption here. But on the other side of it, the things that have value still have value. You know, an ounce of gold is an ounce of gold, an ounce of silver is an ounce of silver, a Bitcoin is a Bitcoin. That's it.
Yeah.
And, you know, it's the dollar that's got a problem. You know, yeah, go ahead.
I think because it's, I think, a good segue to that is you retweeted or tweeted yourself about the volatility that we saw in gold and the percentage of change of gold in Weimar in 1930s is similar to what we see in Bitcoin and the ETF inflow.
Exactly.
And the price action. Can you maybe say more
I can. So it's on my Twitter feed. It's a chart by a friend of mine, a guy named Dan Oliver, who's a very great monetary scholar and runs a gold fund. And he plotted the price of gold and the price of the Weimar mark as measured in gold during Weimar. And what you saw was incredible volatility. And this is because the authorities at the time, you know, they'd come out with a statement and say, oh, we're going to stop printing. We're going to go back to a gold standard. You know, everything's okay. Calm down. You don't need to worry about accepting your marks and holding any. You hold your marks. Be patriotic, right? They would say those kind of things. The price of, you know, okay, everyone, oh, great, okay, yeah, we believe you, government. And, you know, the price of gold in Weimar terms or in Marx terms would go down. But then, of course, you know, the announcement, you know, a month later, oh, we printed some more money. Well, oh shit, you know, and so what you saw in that process was the population of Germany slowly but surely coming to realize they can't ever stop. They're never going to stop. I mean, there are tales of how in nightclubs, entertainers used to talk about how, you know, oh, the only ones that are laughing on these jokes are the people who have, you know, their currency in pounds, dollars, or gold. When you get to the point where the entire country knows the currency is a joke, and it's becoming worthless, it becomes self-fulfilling. Because the currency really is it's the medium of exchange that we all trust in transacting with each other, but also at least over a medium-term time frame, it should retain its value. I mean, it can, you know, and as we've proven, it can debase 7% a year for long periods of time and still survive. But when it starts debasing, you know, when you start debasing 10% a month, I mean, hyperinflation is defined as 50% a month. And we've had 100 plus hyperinflations in history, you know, in the last 200 years. And, you know, we're kind of having a mild one right now in Turkey. They had a very severe one in Venezuela where their currency became worthless. We've had plenty of other examples. I mean, you know, Hungary. I mean, you just go through it. Zimbabwe, you know, there are many of them, and they all seem to exhibit the same characteristics, which is the currency starts dying. It starts slowly, and then it gets more rapid. The swings get wider, it gets more rapid, and then pretty soon everybody's like, "Oh, this is, you know, screw this. I'm out of here. I'm not holding this anymore." You know, and it kind of becomes stunning. I mean, if you look at, I can't remember. I was looking at the math. I think it was on Turkey and what people were buying and the way things cost and things in Turkish, they use the franc. I think it's a Turkish franc, isn't it?
Turkish lira.
A lira. I'm sorry. Yeah. In the Turkish lira, I mean, you know, things are cost like, you know, 200 times more today than they cost, you know, a few years ago.
I've been there.
Have you? Yeah, it's nuts, right?
I buy myself a cheap suit. Yeah.
Yeah, it's nuts. What's happened? So,
but actually, not that much in the end. That's what surprised me is that even me coming with my euros, it's still expensive actually.
Is it? Yeah,
it's still
in real terms.
So it is even more expensive for them.
Yeah, right.
So the thing in Venezuela, I'm not sure if you've seen that post coming across. I've seen like for example, in Caracas, in the capital, a liter of milk would be the same price as I pay in Amsterdam.
Is that right?
More.
Wow.
So actually, essential goods in some things, and then they were just giving price of like some points, obviously, because prices sometimes outside of the city were cheaper, but then inside of the city were maybe cheaper than outside the city, and so on and so forth. So depending on the product.
Sure.
But still, essential products would be very expensive.
Oh yeah, well.
So even if you're hyperinflated and you come with your currency, you still are buying something expensive.
Yeah, true. Although in the Weimar case, there were people who could come from other countries where the currency was strong, and they felt like they were just getting incredible bargains. But you're right, and the reason for what you describe, I think, occurring is that the whole supply chain gets messed up. When you've got inflation that high, I mean, how are any of the producers going to know what to buy, when to buy? And so having low prices is a function of efficiency and efficient supply chain and knowledge, and you know what I'm saying?
It's Mantra DDoS in a way.
Right.
Like too many requests, too many things.
Exactly.
Happening.
I mean,
jam.
Yeah, you're a business person. You're trying to make this thing run. It's like, how the hell, when my prices are going up, I don't know what to charge anybody. I mean, my suppliers are ripping me off, or they're not. I mean, it's very difficult. Yeah.
I have a friend, Venezuelan friend actually. His mother, before they left, it was like probably just 5-6 years ago, so not that long ago. And she basically went to fuel up her car with gas, and she didn't have like enough money to pay the guy. And she said like, I'm sorry, all I have is bananas. And then he said, yeah, sure, I'll take the bananas.
Yeah.
Because you could more or less know, okay, a few gallons of gas was more or less equal to that.
You could figure out the value.
Yeah, exactly.
Yeah, I mean, crude barter. Yeah, I mean,
crude barter, but with reference to
the other one, I mean, as I'm sure you know and everybody knows, is in prison, cigarettes are money, right? I mean, everyone knows what a cigarette is.
Yeah,
and it's got a natural value and a price, and so you just price things in cigarettes. I mean, and that's how things are going to be here. Things are going to be priced in Satoshis. And it's going to be obvious. I mean, it's so obvious. I mean,
talking about Bitcoin in that sense, with the ETFs are coming back now, with the volatility of the gold and the Weimar time, is Wall Street now getting orange pilled, or is it just the financialization of Bitcoin?
That's a great question. It's obviously it's a little bit of both, right? I mean, Wall Street's there because they think they can make money off it.
Yeah.
It
always starts with that.
Yeah, it always. That's right.
Be honest.
I mean, they don't give a shit about the social, value of Bitcoin. I mean, I like Bitcoin because the number goes up, and I'm not stupid. I mean, obviously, I'm doing this to protect my wealth and maybe even grow it. But in general, to me, the most beautiful part of Bitcoin is the fact it's going to make the world a lot better place. And I mean, because even before Bitcoin, I believed in sound money, and I was a gold guy, and so. You can just see if you study classic Austrian economics, you listen to all the greats, and you understand that sound money is a prerequisite to a civil and developed society. It really is, and it's part of how this society is degraded the way. I mean, the degradation, I was a teenager in the 70s, the degradation of the United States since 1971 is so dramatic.
Yeah.
And it's all tied to sound money. It's all tied to sound money. And so, what was your question again? You asked
about the financialization of
Wall Street and the financialization. Right, taking it back to Wall Street. Yeah. So obviously some of them are just there. Hey, look, we can get 20 bips on trillions of dollars. Let's go do it. I think some of them kind of get it and understand it. I think a lot of them are going to make the classic mistake that actually one of my friends, a wealthy guy who I was speaking to recently, said, I don't know, man. I was talking about it was 50,000. I don't know, man. My average cost much lower. He said, God, you told me about it at 25. I should have bought it then. It's up 100%. How can I buy it? And I was like, dude, you don't get it, okay? I mean, if it's $1 million, does it matter if you paid 50 or 25? Obviously it matters, you got twice as much, but the point is, it's going so much higher. And so I think a lot of Wall Streeters are gonna make the classic mistake of selling it when it's up 200%. Do you know what I mean? A lot of people are gonna make that mistake, in my view, because they don't really deeply understand what they hold. And they don't really deeply understand just how far this thing can go. And so, I mean, that's fine. That's their prerogative. But, it takes, as you know, because you've been in this for a while and you've studied, it takes a while to fully, deeply understand just how fundamental this thing is and how much it's going to continue to go up for a long, long time. Sales is going up forever, Laura. I mean, I agree with him. And, I mean, I'll give you my perfect example. I've used plenty of examples. I bought Microsoft coming public in, 1984, right? 85 when it came public, right? I made 3 times my money. I needed to buy a condominium. I sold it, right? That was a mistake, right? Because it was the base layer of the software technology of the PC. Now ultimately the Apple came along and everything else. But the point is, I left and I felt great. I made 300%, or doing, a couple times my money, right? When you get something fundamental that is a change that's going to take place over a period of years and decades, you don't sell it. You just don't sell it. It's like Saylor used the example of Manhattan real estate. I mean, it's the leading commerce center in the United States. I mean, if you came in 1700, you feel like the Dutch who arrived in 1640 got a good deal because you maybe paid 10x. But if you came in 1800, you feel like the settlers, the Brits who came in the 1700s got a good deal because you paid 10x them. But guess what? At every single level, buying a fixed supply of Manhattan real estate has worked. Now it goes down. And the city was, there's a crisis. The city's a mess in 74. You got needles on the streets, all kinds of tax revolt, et cetera. You could pick up a skyscraper for, pennies on the dollar, and some very smart guys did, and they're very wealthy today. But it is an asset that, because of its limited supply, will continually grow in value.
You don't sell a safety raft.
No, exactly. You just don't. Now, having said all of that, you also need to live. And, being a rich millionaire, billionaire, whatever it might be, in my view, is short-sighted as well. Such that, I know people, and maybe one of them who at $1 million a coin might say, well, I need to lighten up a little bit here. I want to take a vacation, or, I don't know what a vacation will cost then, but.
The question will be, will you then pay it in Bitcoin, or will you pay it in Fiat denominated Bitcoin value?
That's right. That's exactly. There's one, and that's a little bit of
2038 or not.
Yeah, well, and that's and that's also a little bit of the be careful what you wish for, because we could have $10 billion or $10 million Bitcoin, but in the same environment we could also have $100 gasoline, right? I mean, it's like part of what's the monetary debasement that's taking place, that's driving what the Bitcoin adoption is also driving higher nominal prices. I mean, when I was a kid, I worked at a gas station, 25 cents for a gallon of gas, right? Yeah, it was a quarter. A silver quarter would buy you a gallon of gas. Ironically, an ounce of silver today, 4 quarters, an ounce of silver today is, it's still, it's about the same, because 4 quarters is $22 the price of silver today, divided by 4, it's 5 or 6, and that's kind of an average worldwide price for a gallon of gas. So, it's surprising that, something that you can't print, silver, has actually held its value. Whereas, if you had, I was, at the time, I remember I was washing dishes, my first job, and I was getting paid $1.10 an hour, right? I mean, that, today that wouldn't buy a lot of tanks of gas. But Wall Street, in my opinion, will be slow to figure it out. And it's funny, it's almost the perfect tool, because, you need to be kind of humble, I think, to accept it for what it is, and to recognize that, you don't know it all. I was quite skeptical of it in the beginning. Saylor was skeptical of it in 2013. He didn't believe in it. He said so. I think
with that book, right?
Yeah.
Why?
I don't know. I'm not familiar with that, but I know he had some tweets that said he thought he didn't believe. And I think the average Wall Streeter thinks they're smarter than the average person. They tend to be relatively arrogant. They tend to be relatively rich. The system has rewarded them and told them that they're smart and successful. And that's why it's going to be such a disruption to their worldview, as this thing, just totally demonetizes everything,
Do you think there will be a way, because you also tweeted that reference to the price increase of, they'll be looking at it as something, I forgot exactly what you said, but it's about all the marbles on the table.
Yeah.
And so there's obviously a part which maybe doesn't see it or doesn't want to see it, because there's interest invested in this system that is not in Bitcoin, and that will want to sway in one way or another Bitcoin's viability, and that's via, I guess, the best, quickest way, what Wall Street does know, is price action.
Yeah.
So the ETF is also a door. That's kind of like also what I thought is like a lot of just revolving topics around the ETF, is that it's also one step into, Wall Street's Wild West, where the big boys, the old boys clubs to say, they know how to pull the strings.
Oh, they do.
And they have the deep pockets as well.
Yeah, they're good at rehypothecating stuff. Yeah, there's no question they could play some games with it. There's no question.
But eventually, so how would, let's just pragmatically, with your experience, how would this game look like tangibly now? Like if they would want to rock the boat? Yeah.
So if they want to do it in the similar way that they did it with gold, they would get heavily involved in the futures and derivatives market. And they would get the Federal Reserve and the BIS and all of the central banks in the world to give them kind of an unlimited checkbook, which is what I think they did with respect to the gold price. And
is that something that was documented with the gold price?
Yeah,
there's
a lot of circumstantial evidence. I mean, there's a lot of circumstantial evidence, including things like Paul Volcker saying in his memoirs, one mistake we made in the 70s was we didn't do enough to control the price of gold. Oh, really? You mean, like, what did you do, right? Yeah, I mean, this is in his memoirs, right? So, I mean, so there's a lot of evidence. I mean, the source for that are Bill Murphy and Chris Powell at GATA.org on the web. They've done extensive documentation. And Robert Rubin and, Barsky and Summers wrote a paper called Gibson's Paradox, which you can Google and see. I mean, Clinton and those guys, remember Carville said, I want to come back to the bond market because everyone's going to be afraid of me because of the bond vigilantes. This was back, and Rubin said, don't worry about it. I got it taken care of. Well, he was an ex-gold trader. And so he knew that gold was the fire alarm that told people that inflation was taking place.
What Luke Groman was saying.
Yes, exactly. And so what they did is they suppressed the alarm. And the way they did it is they set up all these accounts down in the Cayman Islands. You can see them. And because you saw actively huge volumes going through them, the kind of volumes that no rational hedge fund trader could have driven, right? Selling and shorting gold in 2013 when it was getting away from them. It was at $1,900. And the only people that were in a position to do that would have been the central banks and the BIS. And they could do it because they knew they couldn't lose money because, there've been presidential directives and so forth that say keeping the financial system stable and keeping the dollar stable are, above and beyond national security in terms of importance. They're like the nuclear codes. And so they could write and sell paper gold to suppress that price, knowing that if it went against them, the government would just print it and bail them out, right? So if that level of nefarious activity comes to Bitcoin, hasn't yet in my view, but it could, if that level, it could be a real serious problem. I mean, it's, we can see the futures market in Bitcoin, it's not that large. We can see the derivatives market in Bitcoin, it's not that large, but they're both growing, okay? And, it would be entirely possible, and it wouldn't be beyond the pale of possibility, in my mind, for some sovereign actors, including the BIS and others, to say, we got a real problem here. And we got to figure out how to control this, and maybe we need to create a lot of paper Bitcoin and sell it into the market, to drive price action down. And so, and that would scare people, and of course they'll keep, hyping about the volatility and, this, that, and the other. And so, so it's not, I mean, the people who say, oh, well, it's all on the chain, I totally get it. There's no way they can fuck with this. No, that's not true. That's wrong. Because the price is discovered in lots of places. One of them is the futures market. Okay, now, I don't think that's the real price. That's the paper price. But, the gold price isn't the real price either. That's the gold paper price. And unless, we think there are 100 claims for every ounce of gold that exists in the world, perhaps more. But unless everybody who has a claim says, give me the gold, the system doesn't blow up. And this is why those of us who are such hardcore Bitcoiners are so, determined and strong-minded about the notion that you've got to be completely self-sovereign. That owning Bitcoin in an ETF is not a solution. I mean, it may protect you in terms of on a short-term price basis, but you're open to a 6102, you're open to all kinds of bad shit. And you're letting them...
What is the 6102?
6102 was the executive order that Franklin Roosevelt passed in 33, where he seized the gold. He seized the gold. I mean, what if one day the U.S. government wakes up and says, you know what, this is a strategic emergency. We've got these gold guys and these Bitcoin guys ruining our currency. Our position in the world is going to be destroyed. We need to close down all the gold miners. We need to seize all the gold. We need to put a 90% tax on capital gains on gold and 90% tax on capital gains. And for national emergency reasons, we need to seize everything that's in an ETF or everything that's in Coinbase. It's now ours, right? Tough shit. And you don't like it? Tough shit. You don't have the voting bloc to block us. I mean, right? I mean, seriously, it could happen. I'm not suggesting it will happen. I'm just saying it could happen. And, how do I rate it? I rate it as a 5% probability, probably less. But, in that particular case, only those of us who have our own keys, and of course they're going to say, well, that's fine, Larry, you made $1 gazillion here on your Bitcoin, pay us 90% tax. And I'm going to say, Molan LaBey, you motherfuckers. I mean, right? I don't live in the United States anymore. And, I got my 12 words. I'll see you later. Right? I mean, seriously, that's kind of, where we could go. Now, let's hope for the much better scenario, which is to say we slowly but surely kill the dollar. And, more good politicians emerged, guys who are more like RFK than the other guys. And, and maybe Saylor gets into politics. He's probably now the richest, this is 5-10 years out, he's probably now the richest man in the world. And as a...
In Bitcoin terms.
In any terms, really, yeah. And he says, I feel like it's my mission to serve in this role as, the founding monetary father of the new system. And, there's going to be no capital gains taxes on Bitcoin. There's going to be no transaction fees on Bitcoin. There's going to be no restriction on holding Bitcoin. We're going to make all these ETFs. We don't like the fact that we can't see where their coins are. We want to see them. They got to show us the addresses, right? I mean, it's going to be a really Bitcoin-friendly world, right? If Saylor's president, and all the people in Congress and so forth are, Congress and the Senate are that. I mean, who knows? Before then, there'll probably be a lot of...
Saylor 2036.
Yeah, maybe so. Yeah, maybe so. Yeah. I don't know. I don't know if he has any political ambitions, but the point is...
We can ask him.
Yeah, we can ask. Yeah, we'll ask him. Yeah. The point is that things will change as they always do. The system will get better. When
you look at the price of gold, because now we've approached triple top and we've talked about it early on.
It's driving me nuts.
I can imagine the frustration because it's just so clear, yet it's not happening. That it will break out, but on the other hand, knowing that. Being in an environment where rates are still very elevated for what we know with the correlation to price of gold, it's not always correlated to high rates, but it is definitely maybe a factor. It does also say something, right, about
that's right.
Like the current setup.
It is a canary in the coal mine. I mean, the real rates and the price of gold were very highly correlated until about 2020. And gold now smells something that's different. And
it cannot be suppressed either at this point.
Exactly. And it hasn't broken out of the 2,000, 2,100 level, but it's close in my opinion, and will with the next round of printing. And it should have gone down heavily when rates went from 0 to 5.25 on Fed funds. It should have gone down. I mean, just let's face it, and it didn't. It should be going down right now based on the flows. I mean, look at the U.S. flows and out of gold ETFs. I mean, I think Bitcoin is taking a lot of gold's premium right now, obviously. And so Bitcoin flows are gigantic, bigger than we thought, better than we thought. 9,000 coins when we're only minting 900 a day. I mean, that was a couple days ago, right?
Yeah, it's 10 days of mining.
Yeah, right. I mean, it's crazy. And gold flows are going down, and yet the price hangs in there. And what that tells you is there's a worldwide and sovereign bid. The thing that U.S.-centric people have to remember is that the gold market's not just the U.S. The U.S. is a very small piece of the gold puzzle. And with 8 billion people on the planet, I mean, first of all, think of how few people in the U.S. really grok Bitcoin. It's pretty low. Well, take that and extrapolate it to the world, it's even lower, right? I mean, you think, sovereign China, I mean, you think Chinese citizens or Russian citizens, I mean, except for the very, very smart and very well-educated ones. When they think monetary debasement, they instantly think gold. I mean, gold is 5,000 years. Everybody in this world knows what an ounce of gold is worth. You could take an ounce of gold, a well-known gold coin, go into any exchange stop anywhere in the world, any country, and they would give you the local currency. They say, oh, I know what that's worth. I'll give you your local currency. Can't do that with Bitcoin. I mean, not yet. You will be able to, but you can't yet. And so, Bitcoin's stealing gold's monetary premium. Bitcoin's going to outperform gold. It's the fastest horse, all of that. But nominally, gold's not going down. It's just not, because fiat's what's going to go down. And so, if you want to protect yourself from fiat debasement, Bitcoin is choice one. Silver, I would argue silver is actually a better bet than gold. Silver is choice two and gold is choice three.
Oh, really? Okay.
Yeah, well, the reason for that is we've got a big gold store, and gold is just a monetary metal, really. I mean, it's the jewelry use, okay, fine. But basically, it's a monetary metal. Silver is an interesting hybrid because it's a monetary metal with a limited supply, but there's not a big stockpile, and we're using it. I've seen studies that suggest that Chinese solar development is going to require over half of our annual silver production within 5 years, right? And it gets used in every electric car. It's the best conductor out there for the money. Gold's better, but it's much more expensive. So per dollar, silver's the highest, the highest value conductor. And there are all these uses, and we don't have a big stockpile. So to me, when this whole next wave of monetary debasement gets going, Bitcoin's going to 200,000 plus, gold is going to 3,000 plus, and silver's going to $100 plus.
And that's within what?
I would say that's within about a year and a half at the most, based on just my looking at all the charts and just kind of thinking that they're going to have to do a CRE bailout or a big
print. Do you believe that it's soft landing narrative at the moment? Or
I'm sorry, say again?
Do you believe in that soft landing narrative?
I don't. I mean, I don't know what kind of landing we're going to have anymore. I was absolutely convinced we were going to have a crash landing, but I was wrong because, as Lynn has pointed out so eloquently, this fiscal dominance, I mean, they just spend like crazy. So they prevented, I mean, we should have had a normal recessionary cycle based on history. If you thought, right?
But wouldn't you see that fiscal dominance reflected in the bond market one way or another?
You should, but they've managed to suppress it, and there's actually a pretty big bid for the short end of the bond market. You do see it kind of reflected in the long end because they had a hard time on a 20-year Treasury auction recently. One of the things I was discussing last night that I thought was very interesting was that, these stablecoin guys have become, and as you know, a lot of people are using stablecoins to kind of
tether and
right, to transact in Bitcoin. Okay, yeah, Tether Squared, so forth. I mean, so they're a big bidder. I mean, they're a big bidder for these short bills. So, the government still has the ability to fund itself because, 5% interest rate the bond guy is, poker, who's the sucker at the table? The bond guys. They're the sucker at the table. Okay, there's no doubt, right? But right now, a big piece of the bond guys still believe the deflation thesis that we're going back to 2 to 3% in inflation, kind of back to where we were. I think the odds of that are very, very low. Labor pressure, underinvestment in commodities, supply chains breaking with the Houthis attacking ships. I mean, all kinds of, I think the odds of that are extremely low. But if you believe that, if you believe we're going back to 2% inflation, then a 5% yield on a bond sounds pretty good, right? And particularly if it's short, because you can always change your mind.
Yeah.
You get a 1 year, 6 month, okay, fine, inflation change, fine. And I think that's going to be, to me, that's the big flip that's going to happen in the next 6 months. It's going to become clear the dollar's going to fall, oil's going to go up in price because oil's measured in dollars, inflation is going to start to reheat. Powell's going to realize that he really can't be Volcker, he can't raise rates. He may not drop them much, but he may leave them kind of where they are. And, at that point in time, the bond market's going to revolt. Then the government's going to have a problem. They're probably going to have to go to yield curve control or start buying bonds or create.
Like we did in the 40s.
Like we did in the 40s, or create some new facility. Do you know what I mean? I mean, that's the thing that I think we all have to be prepared for is these guys are smart. I mean, they're evil, but they're smart. And they do manage to figure out ways to bail themselves out. I mean, Silicon Valley Bank, BTFP, perfect example. Yeah. There'll be more of that. There's going to be more of that. So they're going to keep, they keep putting, duct tape on the system to keep the system going. Do you know what I mean? But those of us who are watching, and the people are going to say, hang on a second, that's duct tape. I get it. And the money supply will start to grow again. And then maybe if there's a big accident, which I think there could be, but there's no guarantee. But if there's a big accident, like 2019 was a big accident, or 2020 was a big accident, or Silicon Valley Bank was a little accident that kind of got, bandaged up pretty quick. But if there's a big accident where they've got to come in and do a Mario Draghi, whatever it takes, that Fed balance sheet's going from the 7, whatever it is today, to 14. And everybody's going, oh, here we go again. And our ranks will swell, right? Remember, what I said for hyperinflation to occur, we need to have a large quorum of people that go, this is never going to end. They're going to debase my money from now until forever. When the entire country realizes that, just like the entire base of the Silicon Valley Bank depositors quickly realized it, it's over. That's it. It's over. Game ends. Okay? But what percentage of the population realize that today? Maybe 2 or 3% would be my guess.
Quickly, then suddenly.
Yeah, right. That's how it goes.
On one side, you see the bull market is basically announced on every roof in town, and yet we see a very slow economy in a lot of developed countries. Germany is actually suffering. Japan is officially hitting, I think, 2 days ago.
Recession.
Recession, exactly.
Germany, Japan, China.
China as well. But China is a bit more opaque, right? It's always a bit more tricky to
the numbers are unclear.
Good numbers. And the US is showing up allegedly a strong economy that can sustain higher rates. So the equilibrium is apparently even higher than this 5%.
Yeah, I know. You spend a lot of money, you're going to get a strong economy. You know? and you train your populace to use debt. I mean, look at the credit card debt, right? It's just going straight up. I mean, and this is all Thelma and Louise kind of shit, right? I mean, it's like, you know what I'm referring to?
No,
there's a movie called Thelma and Louise where they're, at the end, they're just like having a good time. They realize they're going to die and they're having a good time, and they just drive the car off the cliff, knowing they're going to crash and die. But it's kind of like, hey, for a minute there, we're flying. Do you know what I mean? And and that's kind of what's going on with the U.S. economy. I mean, it all feels great. And then at some point, it's not going to feel so great. But who am I to say what that point is? I mean, if they keep printing money and they're not really printing as much money now, but if they keep the system going, they keep the fiscal stimulus, I mean, and in particular this year, they've got a lot of incentives to keep the pedal to the metal.
Elections, I guess.
They get an election, right. And so, and they kick the can on the debt limit until January, February next year, right? So, I think it's a slam dunk to see a deficit this year of 2.5 trillion, maybe 3. Mm-hmm. And, that'll buy a lot of votes. And, that money, that spending will go somewhere, and, the money's flowing around, and it's a circular economy. So, hard landing, I don't know. I mean, I used to believe in it for sure.
Soft landing.
Or soft landing. Well, no, but I was thinking hard. I mean, everyone was saying soft. I was thinking hard. I was thinking, they're full of it. There's no way. Now I'm kind of like, I don't know. We probably have a muddle through. Maybe we have a muddle through. I mean, it's possible something could break and then it would be really hard. I think more likely is it's a muddle through, but inflation comes back. I think I see a lot of signs that inflation's not dead.
So rates could potentially
and then rates go then rates have to go higher. Well, as inflation comes back, to me that's the next big awakening. The bond market and a lot of Wall Street is going to realize, holy shit, this inflation was not controlled. Powell raising rates. Yeah, okay, great. We brought it from 9 to 3. That's the bottom. We're not getting to 2. We're not going to 1 or 0 like we used to be at. We're just not. It's going back up again. Why? Look at the labor inflation. It's everywhere. There's just a lot of reasons, supply and demand all across the board. With their pedal to the metal on the spending, the demand is pushed up. I mean, the prices are going higher. And so when that happens, the bond market revolts. And when the bond market revolts, the stock market takes a hiccup. Then the negative wealth effect kicks in. And then what'll happen is people start screaming, hey, government, help me. 2 things. One, you got to cut rates. You got to maybe do QE. Those stimmy checks you sent out in 2020, those were nice. Can we have some more of those? And maybe you get them. That was a precedent that was kind of hadn't happened before. But, Gavin Newsom was talking when gas prices were high in California, he was talking about, well, I'll send everybody a check to help with the high gas prices. Right? So that notion has been implanted in the government politic. Biden's already, violating Supreme Court orders and forgiving student debt. And I was shocked on Twitter. There was a story of a doctor who had $500,000 of student debt forgiven. I'm like, what? It's just, and this is, I have business friends who had real legit businesses who got millions and millions of dollars of PPP money in 2020. They didn't even need it. Their businesses were fine. But this was, so we've got a government that's set up to spend money it doesn't have and to cover it by printing. So how do you think that's going to play out in terms of the value of each currency unit, right? I think the answer is clear. It's just not well. That's just the answer. It is just not well. So, all roads lead to debasement. And so, that suggests to me that the right investment move is to back Bitcoin. But it's more than that, because Bitcoin's not really just an investment. It's also a vote and a movement for a fairer and correct monetary system that will, in my opinion, improve the world enormously. Because when you start with a base layer of money that's corrupted, as our system is, you end up with corruption. Wars, corrupt politicians, all of it. And there's always been that kind of thing in history. War is nothing new. Corrupt politicians are nothing new, but it's gotten worse. A lot worse since 1971, to the point where a lot of us really care about it now. And as we've got this sneaky system called Bitcoin, where we can, just by voting with our feet, bring their whole thing down. And it's really It's quite amazing, actually. I mean, Satoshi is going to be, you know, I mean, one of the greatest human beings, you know, he's just one of the greatest human beings ever. I mean, he's almost like a Christ-like figure in my view. I mean, in terms of what he created and gave to us, because it's going to have that large an impact. So, you know, my view is just forget about the price, buy what you can, sit back, enjoy your life, you know, and try and tell other people. Because again, to get to where we want to be, we have to get a consensus of the people to see what we see and to understand that sound money is the answer. So I got to end it there because I've got.
On that note, I was about to say.
Yeah, I figure that's a good wrap up, right?
That's
I really got to run because I got this other thing. But thank you so much.
Thanks a lot,
Alexej. I really enjoyed talking to you. Yeah, anytime you want to get together, happy to do it. And thank you so much. Good to see you, man.
Thanks for watching. If you liked this episode, give it a like and don't forget to subscribe. Leave your actions down below in the comment section. And if you want to watch more videos, feel free to check the most recent video, but also any other video that we've had published on the channel before. See you next time.